Hey, Steve Saretsky here. As always, it's the Friday update video. If you appreciate or if you like these videos, hit subscribe, thumbs up. Obviously, appreciate the support. I really want to hear your comments in the comment section below. So if you have any questions or remarks, whatever, feedback, put that in the comments below and we'll banter back and forth. I got a bunch of things that I want to cover today, so I'm going to keep them all relatively short. I think there's been a lot happening this week, a lot of things that have sort of piqued my interest. So things relating to the Canadian real estate market, understanding those, and I'm going to really try to touch on the I find important points of that. First off, I put a post up on my site yesterday that was in regards to dollar volumes in Vancouver. So one of the important things to understand, people always try to, simplify Vancouver real estate and ask, why are prices as high as they are? And they just, it's too simplistic to say it's because you have mountains and an ocean, and you have population growth, whatever. Like, at the end of the day, it's a financial market, it's a financial asset, and it functions the same. So you have to understand how money flows into investments and why it does, etc. And so I think one of the huge reasons, obviously, why Vancouver real estate has performed and prices have just shot up over the last couple of years is when you're in an environment, in a financial environment where central banks have printed roughly $9 trillion since the global financial crisis, when they're excessive money printing, buying up bonds and suppressing these interest rates to historic lows. Money flows into investments such as real estate because it is a hedge against inflation, because when you have low interest rates, it tends to push up land values, and so that's why you've seen a lot of people in Vancouver land banking, wealthy people, because it makes more sense for them just to buy a plot of land, leave their money there, wait for it to increase in value, as opposed to leaving it at their bank and getting 1%. Because if your inflation is hovering around 2%, I would argue it's much higher than that. You're effectively losing money. So that's the reason for it. So we'll watch sales volumes. I'll watch dollar sales volumes. How much money is actually coming in? How much capital is coming in and investing into Vancouver real estate? And so what we saw basically as the boom sort of took off in 2014, 2015, you saw total sales volume, dollar value into real estate, the amount of money spent on Vancouver real estate was increasing by about 25 to 30% in 2014 and 2015. And then in 2016, it really started to taper off. I think it was around 9% growth on a year-over-year basis. And I'm using data that's from January to October because that's the most updated statistics that we have. So if I take January to October of the past 4 or 5 years to get an idea of dollar volumes, what I can see is that we had explosive growth in 2014 and 2015. 2016, it really started to taper off. You only had 9% growth from dropping down from about 30. And now in 2017, year to date from January to October, the amount spent into Vancouver real estate has actually dropped 15%. So there's a couple ways to really digest it. You can say, okay, well, yes, the majority of the activity has shifted to the condo market, etc. But that's really just a telltale sign of, who's buying, what are they buying. Obviously a lot of the big money is in that higher end luxury market. So you can see that money is dissipating. I think that's arguably the wealthy, smart money. That's, these people know how to allocate capital. And so that's something that I'm looking for as a potential trend, right? So again, and if you peel back the numbers even a little bit further, the Vancouver detached sales volume this year to date is down 28%. So it's, start tapering off, plunge, it's now negative 28%. And then you have condos, which are still increasing, but barely. They're up 3% this year. But even that condo growth, right, is slowly starting to taper. So I don't know if I think that's what that indicates to me, is not necessarily that prices are reversing, but I think it's the potential trend. I think what you have is peak capital in the markets is a thing of the past, at least in the near future. I think with the stress test coming in, that will further put a hamper on capital flows into real estate as more and more policies come out to try to slow the market. So I think peak capital is behind us, which really brings us into that stress test. FICOM, which regulates the credit unions in BC, has come out and said they will not follow the stress test. So now everybody's all riled up and trying to understand what this means. So basically how this works out is FICOM, which regulates credit unions are not, they don't have to do a stress test. So basically, everyone's like, well, why don't we just go to a credit union? Credit unions are so busy right now. They just don't have the capital that the major banks have. And so what's happening is essentially a lot of them are very delayed. Some of them have cut off their mortgage broker channels. Unless you're an existing client of a lot of these credit unions, they won't actually take you on as a new mortgage client. So they are running out of capital. So when they're getting all these applications, they're heavily backlogged. They're going to look at all these applications as opposed to maybe approving 7 out of 10 before. Maybe they're only going to take 2 or 3. I don't know the exact numbers, but basically what's going to happen is they're going to cherry pick their borrowers. And so all those people that don't appear on paper to be as qualified, not as strong as a borrower, etc., they're going to get pushed to the sidelines. They're going to have to go somewhere else. So they're going to have to go to an alternative lender such as Home Capital Group, Equitable. They're going to pay higher interest rates. I think the private mortgage lending space is going to be a huge proponent in 2018. I think you're going to see a lot of junk mortgages out there as people go to these alt lenders, right? I think judging from what I've in my discussions with these private lenders is, if it's a well-qualified buyer, 20% down, the going rate seems to be around 6%, but it really can vary in each situation. So, that's sort of the interest rates that those people are looking at, right? And then but basically happens is they hope that the property goes up in value, and so then they can refinance in a year, pay back that loan, and get a traditional mortgage. But again, that's all fine and dandy as long as the property market continues to rise. So that private lending space comes with a lot of risk. That's everyone's gonna. People are gonna do what they need to do to get into the market, and that's not for me to judge. But again, which really leads me into I think we are in a full out mania. I think if you go back and look in financial history and look at these real estate markets and financial exuberance or irrational exuberance, there's no question that we are in the midst of a mania. Again, I put this out the other day. There's a project in Langley called the Wexley. It's a Langley townhouse development. They started pre-selling units in May of 2017. As of today, 15% of the units in that building, in that strata building, have now been flipped. So, in roughly about 6 months, 15% of the unit has already been flipped. And this was all local, it's in Langley, it's a townhouse development. I've seen pictures of the people that were lining up originally. And so these people had the sole intent purpose to basically buy these and flip these. Again, bought in May, now 15% of the building has already been flipped. That's all local speculation. I go back and I look like I can see the MLS listing, I can see the original contract, I can see what these people paid, and they're basically flipping these things for like $30,000, $40,000, $50,000 in profit. So not bad. I think after you pay realtor fees, etc., it's really not that much of a gain. But again, people are just buying these to make a quick dollar, and that's the market that we're in today, right? I think that we've seen, obviously, again, tying this all back in together. You have capital flows coming into Vancouver real estate, which are dropping, particularly at the higher end in the detached market. So I would argue that a lot of that wealthy, smarter money is sort of moving out of the market, and you have shifting into a local speculation market where all the price momentum now is coming from these in the Fraser Valley, where it's more affordable for condos and townhouses, 1-bedroom segments in Vancouver. So it's all coming from really the bottom up now, and I think that's a lot of first-time buyers, again, local speculators that have capital where they can, $400,000 or $500,000 is reasonable, but it's really hard to come up with the money to quickly buy and flip, $1 million property. That becomes more unrealistic. And so that's where we're seeing basically all that movement, and just really understanding how that all ties together. Again, I just push on the local segment right now. I think I've been a pretty big proponent of understanding of the foreign capital coming in and distorting this market. I think the reality of it is, if you look at the latest foreign buyers numbers, which are out for October, for Metro Vancouver transactions, I think it's 3.1%. I mean, it really doesn't get to the bottom of it. I think, ultimately, the foreign buyers that are buying, the majority of them are citizens here. They're residents of Canada, and so, you have to basically, are they, how do you quantify a foreign buyer? And like I said, I just think that majority of the people that are moving the market right now is that local money, is that local speculation. There's that belief that, foreign money is coming in and heavily distorting this market, that it's an excuse to basically drive these prices up further. And again, like that, I think that Langley townhouse complex is a prime example. I know that the condo growth there is explosive. It's something like 40% price growth year over year in the condo segment. And then you just look at private debt, the OECD, which is an economic organization that basically puts out all sorts of data, advises governments, etc. Canada actually has what's the official statistic? I'll give it to you right here. It's private sector debt to GDP is 217%. So it's nearly equivalent to what Japan was in 1993, prior to their massive, colossal housing bust. That's not to say that we are heading that way by any means, but I think that when you have the levels of debt that we do in Canada, I think it's very evident that people are leveraged on real estate. I think we're very dependent on debt to funnel lifestyles. Home equity lines of credit are explosive. They're up 500% since the year 2000. And so I think this all ties into with that local frenzy phenomenon, is that you have this massive growth in private debt. And again, like I said, it all ties together, and just understanding how money moves, how money flows. People want to talk about foreign money impacting the economy here, and I do understand it. I think it really is like a middle class problem, where you have basically, the government here, we're so, Canada's whole economic policy is basically predicated on immigration and funneling in more and more immigration. And I know Trudeau's, I think, up those levels, or has plans to up those levels. And so you bring in these people that, again, sort of like an astronaut family where husband and wife live here, but, the dad earns an income over there and isn't declaring the worldwide income. And so it ultimately becomes a burden on, middle class people, where you're driving up these house prices. But I think the role of foreign money, you also have to look at it. Again, this is like this is all global markets, right? Like, you have to ask who's buying all these Canadian mortgage-backed securities, who's providing the liquidity for banks to actually give out mortgages to locals here. And I can tell you right now that people that are buying mortgage-backed securities, Canadian MBS covered bonds, are not locals. It's coming from foreign capital, and that ultimately provides liquidity for the banks to create these mortgages. So again, everything is interconnected. Just understanding how money flows into the economy, why people do what they do, and understanding why real estate is going up. Again, you just see, people try to simplify things, right? Whether that's talking about population growth as the reason, or because we're a beautiful city, and lack of supply. I think everybody's sort of pushing a narrative that suits their best interests. But again, it's really just understanding how capital flows and why it flows, etc. So, it's the same thing, right? Like, I think how much foreign investment will we have in Vancouver if real estate wasn't historically such a good return on investment, right? So capital markets are always looking for an ROI, and obviously Vancouver's performed extremely well over the years. But yeah, I mean, obviously some continued things that I'm watching, like the private debt in the system. I think eventually, at some point, households will have to deleverage. There's a good graph that I posted on Twitter the other day, again from one of these reports, where, as I've mentioned, the Canadian household did not deleverage in 2008, much to the United States, Ireland, and a lot of these other, I think the UK, where we basically doubled down on household debt. So, and that was basically predicated on government policies, right? They basically wanted to avoid a crisis here, and so they doubled down on household debt. They've essentially kicked the can down the road, and at some point, households will need to delever. You cannot drive the household debt up to a level where eventually the debt becomes so burdensome that you're basically just paying down interest, and it gets so burdensome that you can no longer even afford to pay down the interest. So that's why you just can't just bring debt up to a forever ceiling just into the sky, right? There's that deleveraging point. I think it is near, but I mean, very well could go on for another couple of years. Again, people, that's not to freak anyone out, right? I can think there's always look at pros and cons. It's really about your mindset and how you perceive finances and what your investment strategy is, right? Like, people could argue, and I think it's a good argument, that real estate is a good hedge against inflation, right? Like, you have to look, if housing does come down here, the Bank of Canada and the government will have to look at policies to mitigate the damage to households. And I think that this is something I'll eventually talk about, but they will essentially have to inflate the currency to mitigate that, and it'll basically reduce your borrowing power. Your Canadian dollar will drop down to 60 cents, that sort of thing. That's how they basically make it look. So your house will be going down in like US dollar terms, but in Canadian dollars it won't be going down, sort of thing. Anyways, I can explain that in another video. I don't want to ramble on. This is already going on 18 minutes here. So that's all I got. If you have any questions, comments, feedback, put it in the comments below. I'd love to hear your thoughts as always, and see you next week.